Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 30, 2024. We're looking at a daily chart of the SPY or SPDR, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have a lot of stuff on the docket, so let's begin with some housekeeping items first. We're closing out 2024. I'm sneaking in another vacation day or two around New Year's. So the live room is closed on Tuesday. We're all closed on Wednesday. The market is closed. There may or may not be a video Tuesday depending on what happens in the market. If one is needed, I'm okay with doing it. Otherwise, we're just going to be back on Thursday in uniform, ready to go. All right, let's go forward. What do we have in terms of the spiders today? Are we going to finish the year on a down note? Are they going to do that on the last trading day of the year? Well, everything hinges right now upon this breakup candle low right down here. The official low happens to be 580.91. That is, and write this down, put it on a sticky note because this is a trader term, that is your bogey. Now, check this out. I want to show you the highest high that we have so far, which is 609.07. Now, if I just put in 609.07 and hit calculate, you'll notice that numbers are in a sequence. So let's narrow into where we are relative to today's low, and you'll notice 584.64 comes to mind. If I put that line on the chart at 584.64 and even drill down to a 15-minute chart, you see what happened today. 584.64 was the magic calculator number. How you doing? In the live room, we went just a touch lower, missed my live room number by 1 penny, but that's in the orb of the give or take. Either way, it was a nice trade for folks that picked it up down there. 584.40, 584.64, 584.65. Either way, magic calculator. Next question, when is it for sale? Answer, likely by tonight or tomorrow. For sure, by the end of the week, it will be for sale. You can have the magic calculator or at least access to it. Comes with a instructional / training video. How do you use the thing? It's pretty freaking cool, if I do say so myself. When looking at the weekly chart, we do the assessment. We're going to do the assessment again at the end of the week. This is the beginning of the week. But here we are above all the moving averages, riding the 20-period moving average. If she begins to crack below the 20-period moving average, the next thing in the sequence comes into play right around 570, 569, 68 area. For those of you that were just recently in or have taken the MSF Masterclass, you'll know exactly where that number comes from. We peel back the onion to come up with the next logical place / number. Can the market trade down for a few weeks? Well, if you, again, took the MSF Masterclass, one of the sections, one of the modules is on cycles. It has to do with forecasting. We did the 2025 forecast. Trading down for a little while isn't out of the ordinary, if you get my drift. How'd we do inside the numbers? Here's a little housekeeping in blue. You can read that on your own. We had higher numbers when I wrote this at 0 dark 30. They started to melt down, so we made an adjustment. We've got a pre-market meltdown on our hands. 587 is the next number down in the sequence. Let's start there. If below, the door begins to open for another leg down where the next number is 584.40. Let's get our faculties and get a handle on these two numbers, 587, 584.40. As you'll see later in the notes, 587 became our pivot. They did go down steadily to 584.40. Low of day, you'll notice 584.41 in this candle slightly higher. So low of day, 584.41 against a pre-market put on the board number 584.40. That deserves a how do you like dem apples? How you doing? 8:40 a.m. Eastern Standard Time. Read the notes, go back to the chart, double check the work. You can see this number 584.40 repeated over and over and over again. When below one number, opens the door for the next. When above a number, opens the door for the next. They are important numbers. They are support if price is above, resistance if price is below the work. What about stocks on the move? Did we have anything going today? Sure we did. We had Boeing and Palantir. Palantir didn't hit its number. It's off the board. Boeing did hit its number. Entry hit? Yes, it did. Let's take a look at the chart of Boeing. There's your zone in Boeing, 172.60 down to 170.50. She spiked through the first number, spiked the second by pennies, ripped it back up in the other direction, went back upward for the remainder of the trading session. Nice trade for those who participated in Boeing inside the numbers. Speaking of which, got preoccupied with the calculator and a couple of other things as it relates to the MSF Masterclass. The price of inside the numbers is changing. It is going up. It is happening into the new year. One of the main reasons is this list of indices, markets, exchange-traded products, a plethora of things which will also rotate and possibly expand as the year goes on based on demand from the members. Pause the video. Go look at these numbers. Put them on your charts and see how price reacts when it gets to these numbers, just the same as the spiders. How you doing one more time? Now, what's going on over in Camp IWM? They actually spiked the bogey today, being this breakup candle low. They spiked it. They ripped it back up in the other direction. The question is, can they stay above it? Now, we were talking about a number last week of 216.85. That number is still important. However, they missed it here. They missed it here. They're probably, or likely, I should say, headed somewhere else. It's still an important number. However, from a trading perspective, I would put it on a different sticky note. It's not in the primary, gotta have this number anymore pile of stickies. Let's look at this thing objectively as well. This could certainly be a bearish, wedgish type of situation after a flagpole on the way down, resulting in a potential another move to the downside. That is in the cards until they, as I like to say, break the chain. How do they break the chain? Well, for starters, they would break the chain by getting above last Thursday, the 26th, getting above that high, 226.14 on close daily chart at a minimum. Write that down, put it on a sticky note. Until or unless they can achieve that feat, they are suspect or subject to go in the southern direction. For the third week in the row, they are running a test of an important big-time weekly chart. Break up candle low. How many weeks in a row can they hold that price? If they don't hold that price, what happens? They will scale down to another price. Where is that price? We'll have that price for Inside the Number and Live Room members for certain. Very similar situation going on with the folks down at the transportation department. We had our eye on 15,730. They spiked it by a few points, ripped it back up in the other direction, but now they're making the same or similar bearish, wedgish type of formation that we just discussed in the IWM. So you got a move downward and you got a wedgish, flaggish situation going on, which can result until or unless they break the chain in a move in the southern lane or southern direction. Beware of what's going on. They're below some moving averages. The trend is your friend until she throws your shit out the window. They are teetering on the 200 period moving average in team transports. They are, in fact, write this down, my favorite canary in the coal mine. What about the Q people? The Q people chart looks similar to the spider chart. They have yet to run a test of said important breakup candle low. That doesn't mean they will or won't. They just haven't yet. It's factual information. The IWM did spike the low. The spiders and the Qs have yet to reach the low. That is still, in both markets, our bogey. When you flip over to the weekly chart, you'll notice the blue line represents the most recent breakout area of importance, and they're well above all the moving averages. The trend is your friend until proven otherwise. After getting a little bit too far from home base when they were up here, home base being the 20-period moving average, they are now working their way back toward home base by using price and time. Both are corrective in nature. I would write that down, put it on a sticky note. How about the financials? We had our 49.90. We zeroed in on that. They gave it up and they went lower, so that was in line with expectation. There's a gap and the next number down is 46.60, give or take. It's all going to depend on whether or not they can hold this set of lows right here. You've got the same bearish, flaggish, wedgish situation. There seems to be a common theme going across the markets on a variety of different charts. That's a clue in and of itself. Write that down. What about Smashmouth, the Philadelphia Semiconductor Index, which happens to be a pretty darn good proxy for the tech space as a whole? You can see they're fighting the triangular pattern, the lower trend line. They're fighting it. They were below it today. They closed right on top of it. They closed one day on the 19th below, popped right back above the next day. When they're out of time, they're out of time. Do they have to wait until they get to the apex of the triangle to break up or down? The answer is no, they don't. It becomes more clear when you look at the weekly chart what's going on here. You look at this triangle. When they get to the apex, they're going to break up or down. And then you begin to see what's here recently, more recently than the entire triangle. You have a move down, which is a breakdown candle. You have a bearish, flaggish situation toward the apex of the triangle. Wait for it. Wait for it. You're coming into or you're around an on time type of situation when taking that in and of itself into consideration. All this stuff is stuff that's gone over, discussed, taught, and reviewed in the MSF Masterclass series. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.